wishing and wishing and wishing and wishing and wishing on me. Yeah. I've been moving calm, start on truck.
Hey, what's up, traders? How you guys been? It's been a while, huh? It's been a while. I'm pretty sure you guys have missed me, huh? Awesome. I love it. Look, you guys, so today I'm making a video, the one you guys have been asking me and bugging the shit out of me for, on how to trade options on Robinhood. Alright, you guys, how to trade options on Robinhood, you guys. But before we get started, you guys, make sure you guys follow me again on Tradewithfidel on Instagram, on Facebook, especially on YouTube. Make sure you subscribe. If you learned something today, make sure you share it with somebody else that could benefit on how to trade options. Or keep repeating it over and over and over again to make sure you get it down, okay? So today, you guys, I want to talk basically about the basics, all right, on how to trade options, you guys. It's very simple. It's a very simple concept. You just have to understand what you're doing, okay, you guys? So basically today I'm going to go over all the simplicity on how to buy a stock, how to sell a stock, how to buy a call, how to basically buy a put. Okay, so first, you guys, we have to understand how to read a chart, you guys. It's very important for you guys to understand how to read a chart, how to make sense of the chart, and be able to predict where the chart is going, you guys. If you guys are able to do that, you'll be able to become a successful option trader and be able to trade all the options that you can, okay, and be able to become successful when it comes to it. But it all has to do to understanding the chart and understanding and be able to predict where the chart is going. Is it going up or is it trending down? Okay, and be able to capitalize from that on a call if it's going up or on a put if it's going down. Okay, you guys? But again, it's very important to be able to understand the chart. If you don't understand the chart, you're not going to become successful trading options. You're going to lose a lot of money. Okay, so if you don't understand it, just stay away from it. Honestly, I recommend it. Okay, so look, you guys, basically not all stocks are optional. Okay, everything goes according to the market cap, the market capital of the stock. If the market capital is a decent good size, then the stock majority of the time is going to be optional. So what I'm trying to say, a lot of the penny stocks are not optional, you guys. And the reason is because of the market cap is so small. And that's the good thing about penny stocks. That's why they go supernova. That's why they move so much, because of the market cap is so small. So when the volume comes in and picks up, it moves the stock a lot. So majority, when it comes to options, there are stocks that are, $5, $10, $15, $20, blue chip stocks. Okay, you guys, that basically have low volatility or medium volatility. Sometimes you'll find some that have high volatility, but not often. Okay, you guys? What do I mean by buying a call? When you buy a call, you guys, it's basically, as you can see in this picture right here, when you buy a call, is that you're predicting the stock will go up to this price, for example, okay? For example, let's say the stock's at $1.50, at $10.50, and I'm predicting the stock's gonna go up to $11.50 by this period of time, between today to 2 weeks or a week from now. Okay, so that's a call, you guys. A put is basically me predicting that the stock's gonna go from $10.50 to $9.50. See, coming down. And again, I could buy a contract from a week, 2 weeks, a month, 2 months, 3 months, so on. Sometimes even longer than that. So that's the definition and the difference between a call and a put. Okay, a call is trending up, predicting the stock is going to go to this price. A put is trending down, predicting the stock is going to go down to a certain price. Okay, you guys? Awesome, you guys. The beautiful thing about a call and a put is that you can make money going up and you can make money going down. So you could be a bull and a bear at the same time, which is cool. Okay, another thing about options, for example, is that let's say I'm holding on to Tesla, and I've been holding on to Tesla for the past 4 years, right? And I know that Tesla is going to come out with some bad earning report or some bad news is about to hit the market about Tesla. And what I want to do, I want to buy a put option on Tesla to secure my loss that's coming ahead. You see what I'm saying? So I'll be able to secure that loss with an option put on Tesla. Does that make sense? It's basically security, it's insurance to secure the losses that are coming ahead. So that's a good way for you to be able to trade options. That's another different way. Okay, give me a second, you guys. Give me a second. Let me go over my notes. I always like to go over all my notes that I have here for you guys. So, for example, as you guys could see here on Twitter, okay, here on Twitter, you guys, let me go over my pictures that I have here for you guys. Here on Twitter, as you can see, you guys. So, for example, on Twitter, right? Let's say there's a call right here that I'm looking at that is June 15th, right? I'm able to buy a call, and here are the options. Right now, the price is at 41.08 cents, as you can see right here. And I want to put a call, for example, to above $42 or at $42. Expires on June 15th. So if the stock goes up to $42, then I'm making profit. It doesn't have to reach $42 for me to sell it. You see what I'm saying? If I get in the stock, for example, is going to give me a certain number. Let's say the number is $1, right? And that is my strike price of where I got in at $1. So when I get in, the stock now needs to keep increasing, going above $1. You see what I'm saying? From $1 to $1.01 to $1.10 to $1.15, then I'm making money. You see, that's what I mean by that. And as you can see here in Twitter, as you guys can see right here, it tells you right here how much it has moved today so far. For example, the $42 call, it has moved 130% so far in one day. See, that's a beautiful thing about options, you guys, that you're able to make so much percentage gain in one trade, in one swing trade. At the same time, you're able to lose so much money. So that's why you gotta be confident. You gotta be 100%, 110% sure to make sure that you know what you're doing, because as easily you can make money, as easily you can lose money. And then from my personal experience, sometimes when you're in the hole, out of the money, when it comes to an option trade, it's not easy to sell the stock because nobody wants to buy the stock when you're in that negative. But what I came to learn, when you're in the money making profit, is way easier to sell the contract and lock in your profit. Okay, you guys? So, for example, that's Twitter right there. As you guys can see, here are the examples that it has. Okay? Now, here we go. If I want to buy, for example, now 40 shares of Twitter, right? Every contract, you guys, is 100 shares. It's very important. And as you can see here, the limit price that it has is from 0.58 to 0.59. So as you can see, this right here is a 1 cent increment. So for example, I want to buy 40 contracts. That's going to cost me $2,360, as you can see. Okay, then I will put review and I will swipe up. As soon as it swipes up, it's going to give me the chance to purchase the stocks. I mean, that contract, 40 contracts of 100 shares each. Okay, so I will tell you what I mean by that in a minute. So then if I could go to this column right here where it has the little chart in the top right corner, you click on that and it will tell you right here the implied volatility, which is very important. You always want to make sure you have good amount of implied volatility, which right here is 42.18%. And right here below it says the chance of profit, 26.37%. You always want to make sure that you're at least at 25% chances of making profit. If it's below 25 or 20%, it's a higher chance that you maybe will not make profit that day. So you always want to put attention to that, you guys. It's very important, okay? Now, for example, what I mean by a contract, all right, every contract, like for example, Robinhood, every contract is 100 shares. So basically, you will not own 100 shares because, for example, buying 100 shares of Twitter is like $42.08 per share. Buying, let's say, 100 shares, we're talking about over $4,000. You see, for one contract of 100 shares, but that's a lot of money. So might as well we just pick you right off the stock and buy contracts so we could pick it right off the momentum of the stock. You see what I'm saying? And we'll be able to buy a contract for so many shares. So for example, 20 shares, or I mean 20 contracts will be, for example, 20 contracts will be 2,000 shares that we're going to be writing off of, picking writing off of. And those 100 those 100 shares per contract, it's 100 shares there. So for example, if it moves 1 cent, that's times 100. You see what I'm saying? So that's where you're able to make so much profit, because you're holding on to at least one contract of 100 shares. So much money. Sorry, it's kind of warm here in California. It's getting hot now. As you can see, summer is here, baby. We love it here in Cali, though. Okay, so now let me give you another analogy of what I mean by a contract. All right, so for example, I'm an investor, right? And I'm looking at this house to buy here in some neighborhood. And this house that is for sale, I'm noticing it that is for sale for $300,000. $300,000. And I go up to the owner. And I tell the owner, so you're selling your home? He tells me, yes, awesome. Let's do this. Let's make a contract that I would do my best to sell your house for the minimum of $300,000, which what you're offering, correct? He tells me, yes. Now look, if I don't sell your house for this period of time, let's say a month, right? We're gonna write a contract that I'm gonna give you $50,000 if I don't sell the house in a month period of time. Now, if I do sell the house, I will give you your $300,000 and I will still keep my 50 grand. Is that a deal? You say yes. Perfect. I'm an investor. You're just the house owner, so I know things are going on in your neighborhood that you don't. I know that in a matter, let's say a month, they're going to start building a park in the same block that your house is in, or a new school, or they're remodeling, doing something to the road that's bringing the value up at your house. But you don't know that, right? So I end up selling your house, right, 3 weeks later for $326,000. You see what I'm saying? So I give you your 300 grand, right? And I made 26,000 on top of that profit, and I still keep my $50,000. That's what I mean by a contract. Now, for example, the month comes, I'm not able to sell your house for what we spoke about. I will lose on the $50,000, and you will keep the $50,000 plus you'll still have your house for you to sell on your own. You see that? That's what I mean. That's an analogy of what I'm talking about, a contract. All right, you guys? I hope you guys understand that. All right, let me look at my notes real quick. All right, so I did a Twitter example. Okay. Give me a second. Me personally, team, when I do an option trade, I'm looking for that day, the next day, or the third day tops. I know some contracts are able to hold for 1 week, 2 weeks, up to a couple months. So me personally, I'm looking for that day, the next day, or the third day to get rid of the contract. Okay, I'm looking for that quick momentum gain to be able to capitalize and take, 50, 100, 200, 300, etc. percent in that one trade. Okay, you guys. So again, you guys, when you guys get into a stock, like you guys could see in this picture, when I get into a stock, it's gonna give me a price that I got in at. As you can see, this is the price that I got in at. So the goal is for this price to continue to rise up. So for example, if I got in at this price, it needs to continue going up and going up and going up and going up. And again, that price will be multiplied to how many contracts per, how many shares per contract I have. That's where we're able to make so much money. And you call this the spike price, all right, what you got in at. And you want it to keep increasing for you to make money. All right, team? Awesome. I hope you guys understand that. Sometimes members tell me, what happens when you get too close to the expiration date? Well, if you're out the money means you're not making profit. Your stock is gonna expire, your contract, it's gonna expire worthless. It's not gonna be worth nothing when the end of the contract date comes up. And Robinhood, they will do the work for you, and they will exercise the right to sell your contract at a negative, and you're gonna cut losses. Okay. Now, so they tell me, well, how about I'm in the money in the money means you're making profit. And my contract is about to expire the next day. From my students, in my personal experience, I don't want Robinhood to exercise the right to sell my contract. I would like to do that myself. So I always like to sell the contract if I'm holding it that long, because if I'm making profits the day before the contract expires, that's when I will sell. I will not let Robinhood sell my contract. Okay? Because of course no broker is gonna look out for you. I'll tell you that right now. Okay? Awesome, you guys. Awesome. Again, it's very easy to make money when it comes to trading options, and again, it's very easy to lose money, you guys. Again, it's very important to be able to understand the chart, to be able to make sense of it and predict where the trend is going. If it's going up, call it. If it's going up, punt it. You see, we put a punt on it. Okay, you guys. A lot of things that help out when it comes to trading options, you guys, is a catalyst. Especially majority of all the option stocks, are a lot of them, majority are blue chip stocks. You know, stocks that are worth, 15, 20, 25, 35, 40, 50 or higher, blue chip stocks. That's why the majority of the ones are optional. So you always want to find sometimes a catalyst of why the stock is going up, or why is it moving up, or why is it going to drop. Okay, that helps a lot when it comes to options. FDA news, some type of catalyst, or something that helps a lot too is the earning report. If you know the earning report is going to be negatives, by looking at the previous earning reports, it will help out sometimes. And you notice the report is going to be negative, so it's going to drop the stock down, so that you want to buy a put on that. Or the report is going to be positive, the stock is going to go up, so you want to buy a call on that. You see what I'm saying? Stuff like that helps out, you guys. Like, for example, I'm going to give you a quick example. I remember when I first did my first option stock, it was on Sprint, stock S on Sprint. And when I got Sprint, it got my attention because it was way overvalued, way overextended. And the first thing I did, I did my homework to see why it was way up there. Then I found out that it got merged, if I'm correct, with T-Mobile several weeks ago. That's why it was up there. So then I put a put on it because it was way overextended, and it was way overextended over the 1 year chart at the highest level that it has been that whole year. So yeah, I put a put on it, and yes, guess what, you guys? After hours, it dropped. It dropped so hard. The next day, I sold it for like 67% profits. I sold it too soon. It kept dropping for like 2 days straight. You see that? So that's one of the things, you guys, you want to catch sometimes when a stock is way overextended. And what I mean by that, it means that it has been going up and been going up for the past several days, or it's at a way higher price that it's not supposed to be at, that correction, consolidation is going to be due. That's a good analogy right there to put a call on it. I mean, to put a put on it, I meant to say, because of course it's going to drop down. Majority of all stocks go back to where they were, if they're extended or they're undervalued. Or again, if they're undervalued because something happened and the stock is going to work its way up in a matter of maybe 2 weeks, a month or more, you could buy a call on it and work your way up as well. Okay, you guys? So those are just some quick examples, you guys, on how options work. Okay, I hope you guys can make sense of it. I've been trading options now for a little bit, about a month now, you guys, and I have made a killing doing it, you guys. Not only that, you guys can see, look, here are some of my trades, hundreds of percentage gains. Last month was one of the best months I ever had because of me starting to trade options. But not only that, a lot of my students that have been training how to trade options, they themselves has been killing it. So again, if you guys do want to learn how to trade options, let me know. Send me a message through Facebook, on Tradewithfidel, on Fidel Savala on Facebook, or Tradewithfidel on Facebook, or join our Discord app. Our Discord app, there's a lot of information there too. A lot of my members are already experienced and know what they're doing. They're willing to help out, and I'm willing to help out as well. Or you want to get a one-on-one training on how to trade stocks or how to trade options as well, just let me know, you guys. We are here to help. But again, it's very important for you guys to join the Discord app on Trade with Fidel. I will leave the link below so you guys could see how we get down and what we do, because you know we are always trying to help out the community and throw a bone out there to make sure you guys are making some profit too as well. So right, team, I hope you guys learn a lot from this basic training when it comes to trading the options, so you can get your BP wet, if you know what I'm saying. Any questions, any comments, feel free, let me know, leave a comment. I will write to you guys back as soon as possible. I hope you guys understood what I said. If you guys want to know more into depth, let me know and I'll be glad to teach you guys how to make some profits. Alright, team, you guys have a good week. Bye bye.
God's plan, God's plan. I hold back sometimes I won't. Yeah.